Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi Ajay, good morning. Your thoughts on LIC taking over IDBI Bank? The government has been trying to sell IDBI Bank for the last 2 years. Private companies have not shown interest, and now it looks like LIC will bail it out, but this time with policyholders' money.
If you were an LIC policy holder, you would tend to worry today, saying under which portfolio are they going to keep this dog there, man? I can't believe it. I think we have to get out of this syndrome of subsidy, cross-subsidy government, which is why PSU stocks don't give you returns. If you look at commodity stocks of PSUs, look at NALCO, look at NMDC, they are so dirt cheap. There's no comparable in the world. And the only reason is people have a doubt in their mind that what next will come to these companies, which burden they will be thrust with, will they be merged with something, etc. This is the craziest thing I ever heard. IDBI Bank, let it go, let it get merged. You remember Bank of Punjab got merged with HDFC Bank long back? It happened. Centurion Bank got merged very nicely. So Bank of Rajasthan got merged very nicely. What is holding the government back to say, let's just merge these banks wherever they go, whatever the equity value they get is fine? This is crazy, absolutely crazy.
Okay, the stock that's making a move now is Aurobindo Pharma. In fact, the entire pharma pack, midcap pharma, is making fresh moves. So Aurobindo, DVs, granules, seeing quite a bit of buying. Now, Ajay, how do you define this move of late in the pharma pack? Is this just a case of market realizing, look, there's one big sector which hasn't made a move and there is value, or is something fundamentally changing here?
No, I think things are fundamentally changing. That's one. Number two is, as always it happens, when we become bearish, we become totally bearish in the sector. Most of the stocks in pharma are down to 2 to 3 times book value. Typically, they should trade at about 7 to 10 times book value. So you got almost a 50%, 100% cushion there, sitting there of the price upside that you can expect. Number two, people have now seen a steady story like IT, that when it starts to move, the momentum takes it forward, which comes back to the point. This is a market for momentum. This is not a market to value. So when pharma is now into momentum, 3 times book value, 2 times book value, highly cash flow generating companies, leverage is not strong, US is stabilizing, there is no reason not to go in there. So I think this is a story still unfolding. Lot of way to go. Lot of private equity interest in this sector. Believe me, a lot of private equity interest in this sector. Most stocks are undervalued. So you are in a very safe territory, even if you board the bus today for the pharma.
Speaking of looking for value, Ajay, something like Tata Motors, I don't know your view on the company, because everybody's been wondering when the turnaround will happen. They went and met investors over Friday, giving some very optimistic projections on margins, 7 to 9% after 2021. But I don't know if that kind of a long-term view is going to be taken on board today, and whether that means any sort of a meaningful turnaround for the stock.
Tata Motors has flattered to deceive, I think, for years and years. So I think of course, the new chairman is in, so some more credibility should be given to him as to what he can do with it. But there is something about, I don't know if you noticed it, there is something about DNA of a stock. A non-performing stock, for whatever reason, always underperform the market. And it's nothing to do with the management. It's nothing. It just happens that these are bad stocks which just give bad returns to investors. So I'm not sure whether the turnaround will happen. And why do I need to wait this turnaround when I got better stories? If Tata Motors turns around, I think Maruti will do a lot better than that in any case. The auto ancillary sector would outperform Tata Motors by and large if the sector turns around. So if I have to invest in this sector, I would rather go buy auto ancillaries. I would rather go buy the mainline auto companies than try to wait for a turnaround, because if they can make double digits or 9% return, the rest of the industry will do a lot better than doing today. So so I'm just simply saying the thesis here is, don't worry about turnaround candidates. Maybe somebody else can make that money. The surefire bets are where to put your money in and sleep safely and soundly.
All right. You said the story is yet to unfold in pharma. In IT, there is momentum which is taking the stocks forward. But the IT index has already rallied, what, 20–25% since the start of the year. Where do we stand in the upcycle in the IT stocks now?
I think, IT is one, again, these are stocks which you should not look at year to year. look at a 3-year time frame, and you would safely get about 20-22% return on capital employed today, which is compounded CAGR, which is very, very good return. Believe me, Warren Buffett could not beat 20%. So when you're doing a 20% kind of a trick, it's a very good return. But you got to be patient with it. This is not a place to get in and out. If you look at even mid-cap ITs, whether you look at Tata Elxsi, whether you look at Mindtree, that's the kind of return they've done. But there have been long pockets, long periods, when they just lie in a slumber. And you kind of wonder, are they alive also? You know, you kind of wake them up and say, are you alive? But I think you need to go through the slumber. Today's all exciting, but I think let them be. If you keep it in the portfolio, I would say if you're putting money in IT, put half the money in pharma, you would balance out that super stellar returns in pharma versus average returns or a decent returns in IT.
Ajay, 6 months back, you know, if you would have thought Bajaj Finance would give you 50% from that point, would have been crazy, right? I mean, as we speak, fresh all-time high, market cap approaching 1.5 lakh crores. What a stunning story, and FinServ as well. Absolutely.
I think again, back to the same point, you know, if you look at it, these were performing stocks. Of course, none of us anticipated 50%. I would have put all our money there, for instance, but we didn't, all right? But the fact remains that these are performing stocks which will keep performing year on year. Now, I may not buy today Bajaj Finance because I still believe it's overvalued at today's price. If it gets a correction, fine. If it doesn't get, I'll buy something else and keep it. But that's not the point. The point here is it keep reinforces the theory that a winner will remain a winner, and look at the promoter, credibility of the promoter. A clean promoter will give you a plus premium in the market. So look at the promoter, look at the management team, look at the clean balance sheet, and you got, forget the business fundamentals, you got a fantastic stock. And that's true for everything else. You know, whether you look at HDFC Bank, stellar return, Bajaj Finance, stellar return, and so on. It just keeps repeating itself. You saw how recovery of Nestle has taken place. Phenomenal recovery of Nestle. So I think it's just a story unfolding is stick to quality. There is no reason to go scrounging in the dirt for small caps.